We've got a packed schedule of quality interviews this week here on Dukascopy TV with big name banks from Geneva and indeed Switzerland, and I'm delighted to welcome the Chief Investment Officer at Banque CIC, Mario Geniale, into the studio. So thank you for joining me in the studio, Mario.
Thank you for having me.
We're going to talk about a familiar topic, the Eurozone. It doesn't go away, this story. So let's start by a quote which I've taken from the Financial Times today. It's from Wolfgang Munchauer, and he says, Italy has already tightened fiscal policy despite the recession, and Spain too will come under pressure to do so. Everyone is following in the footsteps of Greece. Obviously, Greece aren't great economic footsteps to follow, and we should point out Wolfgang Munchauer is generally quite critical of what is going on in the Eurozone. But does he have a point that countries like Spain and Italy are raising taxes and cutting spending at a very sensitive time?
Well, I think there's no way around that they do so. And we're at the time where just investors are not willing anymore to look at all the debt just raising around the world, especially now in Europe. And I think that Italy has done the first steps, but it's just the beginning. So the next one that we're going to see is definitely Spain. And I think the market's going to focus more on Portugal. We already see that yields are moving up. There's a big chance that we're going to see some kind of a minor recession in Europe, and we are not that negative going forward into the year. We think that at some point the economy is going to pick up again. We hope that they're going to be taking some measures to stabilize the whole situation, and that we're going to see growth somewhere in the end of 2012 and for 2013.
You talk about a minor recession, but when countries like Italy and Spain are having to undertake these major fiscal readjustments, surely that's just going to mean a prolonged recession and a downward spiral.
Yeah, we are actually not that negative. Obviously, for countries like Greece, they're in big trouble. So we don't see Greece coming out of the doldrums over the next years. There are going to be some programs to stabilize the economies in Europe as a whole. And I think it's not going to work out without the help of Germany. And furthermore, we think that especially the Asian economies, at some point everybody's talking about China, and we think that at some point China is going to step in and help to solve the whole situation, because we think the risk is much stronger on China than for Europe itself. If Europe falls into a big recession, then probably China's going to have more problems on their production level.
You mentioned Greece earlier there. We've constantly been talking about Greece for a few years now. We have these ongoing negotiations between the IMF, IIF and the EU. What do you think is going to be the end result? Do you think it's going to be a messy default, or do you think we're going to come to some sort of deal?
Well, I think there's no way around that that we are going to come to some kind of a deal. I mean, for the Greece economy, it's going to, as I already said before, it's going to take years for it to go back to normal. But that said again, there's going to be some kind of a deal. The banks are going to strike this deal because there's heavy pressure from the banks on the financing side, and they need the money from the governments as well. So there's no way around that the banks are going to be willing to strike a deal for Greece to clear the situation, at least at some point. But that said again, and we know that even if the deal goes through, the GDP, the debt to GDP is going to remain somewhere around 120%, and so that means that it might take some years for Greece to get their debt further down.
When do these dominoes stop falling? Because let's say Greece is fallen, Portugal is starting to fall, as you said, the bond yields are rising. Spain will come under pressure, no doubt, but will Italy come under pressure, and would it go as far as France?
Well, I think that Italy, at some point, I think that the whole situation around Italy is going to stabilize at some point. It might take some further months down the road, but there is the clear willingness also by Merkel to clear the whole situation. They are now in talks together. First, it was just the talks between Merkel and Sarkozy, and now it seems that there are more talks between Merkel and Monti. So we think that Italy is not really going to be the big problem in the end. Where it's going to be a problem, as I already said, it's going to be Portugal. I think that there is some risk that that probably if this deal with Greece goes through, there's a big chance that Portugal says if they got the chance that they could cut their debts like this, they're going to say seek for a similar solution.
This is exactly what Germany hates, though, isn't it? That countries start defaulting and having haircuts on their debt because they think this is the wrong example to give to countries.
Yeah, but there again, probably there's no way around it. That at some point you just bring down the debt, and from there on you can start rebuilding up the economies. So probably there is a big risk that Portugal as well goes the same way.
Let's turn our attention to the most heavily traded currency pair, euro-dollar. At the beginning of the year, there was lots of policymakers and economists pointing out all of the good things what weak euro would bring, especially for the exporters. At the moment, we're seeing one of these rallies. It's at about 129 at the moment. Why does it remain relatively bullish when these fundamental problems remain?
Well, I think these are short-term drivers. These are rather short-term drivers. We think that the euro to the dollar is going to go somewhere down to 120. It could even go down somewhere to 110, at least temporary. As we said, we think that during the course of the first half of the year, we think that there are a lot of problems not going to be resolved, but at least the path to a resolution of the whole crisis is going to be shown up to the investors, and to the year end we think that the euro again is going to strengthen. So the strength that we see now is just temporary, and we think it's going to go down again at least to 125, 120, possibly even lower. We have a short-term target or a short-term idea of around 110. But we think that the euro to the dollar will end somewhere around 125 in 2012 at the end.
And we can't ignore the impacts on Switzerland. Currently, this 120 floor is coming under more pressure than it did initially. Do you think that the SNB is currently intervening in the market to try and maintain this floor?
The SNB is currently, as far as I know, is not intervening heavily, at least. But it's obvious that there is some pressure now on this floor, and it makes absolutely sense. We think that the whole situation now around Greece and possibly the shift towards Portugal is going to remain for the next 1 or 2 months. So probably the market is going to test still the 120 for the next weeks. That said, again, as we said, that we think that in the first half of the year there will be at least some decisions be taken for a possible solution of the whole crisis. We think that the Swiss franc is going to get weaker then back again towards the end of the year, and that we will end up somewhere around 135 is our call for the end of the year, which is quite bullish, but that's at least the direction is what we think.
And will that involve another raising of the floor, or do you think the market will naturally end up at 135?
The whole discussion about raising a floor once again obviously is not the first thought of the SNB at the moment. Right now, we think that first they have to clear the situation within their own directory, and then afterwards, as soon as they have cleared the situation, we think there's a good chance that they're going to raise the floor. Might make sense to raise it not too strong, probably around 125. And from there on, they will see what's going to happen to the market.
Okay, Mario, you're the Chief Investment Officer at Banque CIC. So how would you approach this whole turmoil? Are you very defensive in terms of investments?
Yeah, we have been defensive for some time now. What we think is that people have to be careful not to get overly defensive. Everybody's just sitting, for example, on the equities that pay a high dividend, are staying in the Swiss franc. And we think that at a certain point, I mean, timing is everything. We think that at a certain point it might make sense to get a little bit more aggressive on the investments. There again, we would wait for some statements what could be a possible solution over the next 1, 2, 3 years for the European situation. But as soon as we see a little bit clearer there, what politicians in Europe are planning to do and to solve this whole situation, we think that it might make sense to go a little bit more aggressive. It's the same story again also for banks. Everybody's very negative on bank stocks, and we think for the time being it makes perfectly sense to be a little bit more cautious on banks. But that said, again, with the program, the long-term refinancing operations that the ECB has done now back in autumn last year. And there's a good chance there's going to be another one, well, they are talking about February, possibly in March, that the banks at some point are not going to be that heavily under pressure anymore, also to refinance the whole balance sheets. And that's something that's going to help the banks.
Okay, well, thank you very much, and thank you for coming from Basel to speak to me today, Mario. Mario Geniale speaking to me from Banque CIC there. As I said at the top of the interview, we have plenty of quality interviews to come here this week on Dukascopy TV, so make sure you check back. But for now, goodbye.